Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so sorry for coming in a little bit late this morning. I actually thought I sent out the message informing you that I will be a little bit late today, but I just saw that the message still sits right in the typing area. So I'm very sorry, guys, and I had to sort out some personal issues as always. But thank goodness we are fine and I'm ready to kickstart the Forex Morning Mastery for Wednesday's trading session. And in fact, we are gradually approaching the second half of the week as we can beginning to see that price action has beginning to gain traction, which is of course peculiar with second trading day of the week and the third trading day of the week, and then we will move into the last phase of the week where we might likely begin to see some reversal setup transition on the charts. But in preparation for today's trading session, I already behind the scenes and conducted a comprehensive analysis of all the assets on our watch list. So far so good. We have been doing very well since the beginning of the week as we have been monitoring the USOILSPOT, the GBPUSD, and of course the XAUUSD, all of which are doing very well at this particular point in time, though the GBPUSD had some counter trend momentum this morning, and we do know why that is. We will be talking about that in a moment. So hope you guys are ready. Stay tuned in so you don't miss out on any of the valuable ideas we will be talking about today. Well, for those of you who are joining me for the first time, I'm very excited and glad to have you around with us this morning. And I'm very sure you will be wondering, what is the Forex Morning Mastery with Sheriff Daramola all about, and what is it that we simply do here? Well, first of all, I would like to emphasize here that during the course of the weekend, I usually share a couple of videos which indicate my plans for the new week. And of course, the Forex Morning Mastery was born out of the idea of doing follow-ups on this video on a daily basis. So as a result of this, and as technical traders, we usually gather here every day to come together as a community and engage in follow-ups and reviews of our current positions. If we have any, look out for trading opportunities ahead of, and of course prepare for the London and the New York session. So the session usually kickstarts officially 9:05 a.m. West African time, 8:05 a.m. UTC. So I recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be discussing here today. Now, what is my purpose here? My aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you get to comprehending our analytical approach and utilizing the information gathered here to make your own trading decisions and strategies. So once again, I welcome you all on board and encourage you to engage in the comment section below. So with that being said, here we will be diving right into the business, and in fact I can see a couple of comments here, starting with Kelechi, good morning to you. Thank you for checking in, and good morning to everyone too as well. Ronald Kalmin, good morning to you. Then Torres Master again with his narrative every morning. Good morning. We are okay. Yesterday was a good day. All right, same here also. We hope that we can replicate what we've done yesterday today as well. Now, Eric Modavadi, good morning to you, Eric. It's a blessed day as always. Thank you very much. And Victor Olusegun, good morning to you too. So thank you guys, I really appreciate the positive energy in the here. So as always, the next thing we normally do is to keep tabs with the fundamental factors that are likely going to be affecting the market sentiment for today's trading session. And of course, for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, so far this week, based on the assets we have been monitoring, we have been focusing on economic feature, in fact, high impactful economic features from both the United States and the United Kingdom. Well, for today, Wednesday, December 20th, we have a couple of high impactful events which came in from the United Kingdom economic docket, and that is the consumer price index. Now, for those of you who do not know what the consumer price index is, well, this is a measure, or a data that examine the average change in prices paid by consumers for goods and services in the last 1 month. Now, a higher than expected CPI can lead to concerns about inflation, impacting the market sentiment, as it may prompt expectations of tighter monetary policy to control rising prices. However, if you look at the data that came in this morning, it actually came in below expectations. Now, and even compared to the previous month, it's not really, it came in way below that. Now, look at the previous month. For the month-on-month, year-on-year, and the core consumer price index, respectively, we had 0%, 4.6%, and 5.7%, respectively, while consensus were projecting, though we expected that things would be a little bit lower based on what consensus were projecting, but lo and behold, what came in this morning was way below all expectations, giving us a negative deviation on all instances. So we had a deficit of 0.2% for the month-on-month, 3.9% for the year-on-year, and 5.1% for the core consumer prices. And now, what does this simply mean? Well, normally a higher than expected figure should give insight into the rise in prices, which of course tells us that the inflation in the economy is still sticky. But with the way things are right now, it shows that the inflation in the United Kingdom is gradually dropping, hereby showing signs that the measures that the Bank of England had put in place, that is the monetary tightening measures they have put in place, has actually had some significant impact in the economy. Now, what this simply means is that there is a likelihood that there wouldn't be any interest rate hike in the next interest rate decision based on this data, but it's not going to be cast in stone, as there's going to be quite a lot of economic features from the United Kingdom that will come in even before the next interest rate decision will happen. So as a result of this, Andrew Bailey's hawkish comment last week may be negated with this recent development, and of course we have seen how market participants had reacted negatively to that asset, especially on the GBPUSD. So we will look forward to see how the market participant would digest this data after the release, and then let's see if the pound will still gain some momentum afterward. So based on what we have on the economic calendar today, this is what we shall be looking out for today. So I want to include the medium impactful event as well, so that we can see if there is something from the United States that could give us an insight or prepare us for a catalytical moment for today. So let's look at what we have here on Wednesday. Oh, great. We have consumer confidence coming in from the United States in about 7 hours from now. And what's the consumer confidence? Well, this is a data released monthly basis by the Conference Board, and it is a survey gauging sentiment among consumers in the United States, reflecting prevailing business conditions and likely developments for the month ahead. Now, this report details consumer attitude, and of course, when there is a lot of spending in the economy, it shows that the economy is buoyant. So what this simply means that this data shows a picture of whether or not consumers are willing to spend money in the United States, which is a very key factor in explaining consumer spending. So generally, a high reading on this one should be considered as positive for the US economy. Now, from what we have here, we really do not have any data to compare with at this point. Usually when this happens, it will take maybe about an hour or 30 minutes into that event. We then get a figure. Then another important one here is Goolsby's speech coming up later today. And Austin Goolsby is the 10th President and Chief Executive Officer of the 7th District Federal Reserve Bank of Chicago. Now, he's going to be giving a speech later today, and of course, whatever he says here will be giving us an insight into the monetary policy outlook of the Federal Reserve, and of course, give us an insight into the health situation of the United States economy, and everyone in the market will be looking forward to that speech to have an insight of what they will be doing next. So these are the most important event we will be looking out for today. And one thing for sure is that as technical traders, we do know that the anticipation of this event usually reflect on the chart as price action. So talking about price action, let's move right into the business. So as usual, the first asset we will be looking at this morning, I already opened it down, so I don't want any delay as we kickstart the session, is the USOILSPOT. And in fact, since the beginning of this week, unlike the last couple of weeks on this asset where the first days of the week was always in losses, but this time around things are very, very rosy as we have significant amount of profits going on this particular asset. Now let's look at how the week started for us on the USOILSPOT. Now, before I go into the details, I want to reiterate here that on the Forex Morning Mastery, we usually focus on the 1 hour time frame. Now, for those of you who are joining us for the first time, you want to be checking out on my Monday video on the USOILSPOT, where I did a top-down analysis identifying the major structures, key levels, and chart patterns we will be using to guide our decisions for the week. And if in any way you missed out on that video, you can check the link in the description box of this current video. You will find it out and check it after the live session, so you can keep tabs with have the background knowledge of how we got to this point. So we had our key level around the $72.50 area at the beginning of the week, after identified how important this level had played a major role in determining the direction of price action in the last 1 to 2 months. Now, besides this, we know how we use our key levels in this community. As long as price remains above the key level, we look out for patterns and structures that support the idea of buying that asset. Now, if price drops below our key level, we want to be looking out for patterns and structures that supports the idea of selling. Now, at the beginning of the week, price action was just below our key level. In fact, it traded around our key level for a while before we had some breakout of that structure happen. In fact, the first thing we saw was price action, though it started the week on a bullish note, but for the first 10 to 12 hours, it was more or less confined within the $72.50 area, $72.50, $72.60 area, and of course the $71.96 area, giving us a flat channel to work with. And usually whenever we have this kind of flat channel identified on our chart, we exercise patience and wait for either the breakdown of the support line of that channel to happen to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. Now, with the situation here, we initially saw price action break down both the ascending trend line we identified here, and of course the support line at the $71.96 area to trigger our first sell position for the week. And in fact, price moved about close to 100 pips in our favor before the bullish momentum came in. And of course, I told us all on Monday to move our stop losses and secure that position. And if you had done that, you should be having a minimum of 50 pips in profit on that first sell position. Then we were hoping that price action will come back probably to retest the ascending trend line or the support line to incite a sell-off, but instead we saw an engulfing bullish candle springing out of that ascending trend line, hereby welcoming the idea that we might be in for a buy position. And of course, with our buy stop order placed within the zone, this resistance zone here, we capitalized on our first buy position for the week. And in fact, price action moved over 200 pips. Over 200 pips we had on that first position, as you will see here, before the bearish momentum came in to take us out of that position. So on that one as well, we were able to hold on to about 100 to 150 pips, depending on where you had moved your stop losses to. Now, during our live session yesterday, we talked about the potential of an uptrend continuation as we saw this bearish impulsive move to the downside as a retracement of that impulsive leg. And one thing we said here yesterday is that we are at a crucial juncture as a continued buy pressure around the resistance zone that was broken out of yesterday, which interestingly shares a beautiful confluence with the ascending trend line we spotted at the beginning of the week, will welcome more buy position. And in fact, I can remember telling us all that I already placed a buy position already, which was running during our live session yesterday. And thank goodness things worked very, very well as we saw reversal setup unfold around that area to incite another wave of bullish momentum, as you will see here. So it has been quite a tremendously profitable start to the week for us all in this community. And we also had multiple levels that we said we will be using to maximize the potential of that bullish move. So we had levels at the $73 area. I also added one more here during the New York session yesterday, had the $73.70 area, and of course had the last one here, had the $74.50 level at this point in time. So as at this morning, while I was sharing my updates in terms of commentaries on all platforms, we were already running with over 350 pips in profit on this particular asset. And for those of us who capitalized on this opportunity, well done and kudos to you for being on standby to take advantage of this opportunity. Now that price action has moved significantly well in our favor, what is the next thing we want to be doing? Of course, we want to ensure that we safeguard all the buy positions we have here, as anything could happen in this particular market. And if you would ask me, I would suggest that anywhere around the $74 area seems most appropriate to move all stop losses to, while we also give enough breathing space for price action to move around. Now, as it is right now, we are at a crucial juncture in this market where anything could actually happen. And in fact, we had some latest development happen, especially one of the major reasons why we can see the oil of prices rising is probably because of the geopolitical disruptions, particularly stemming from attacks by the Iran-led Houthi militant group on commercial vessels in the Red Sea. Now, the United States has responded by establishing a task force to safeguard the Red Sea commerce in light of these attacks. However, the Houthis have pledged to defy the US-led naval mission and continue their assault. So this whole tension right here is definitely going to be shadowing a level of uncertainty in this particular market environment. And of course, this kind of uncertainty is likely going to be favoring the buyers in this particular market. So as a result of this, we maintain a bullish bias, but we ensure that we secure all our positions. Then another thing that came up later yesterday was the S&P Global Commodity Insights, which suggested that there is going to be an anticipated increase in US oil production, contributing to robust non-OPEC plus supply growth that may outpace global demand in next year. So the US is trying as much as possible to pump in enough oil in the market to negate the oil cuts by the OPEC, the Saudi-led OPEC plus group. Now, this projection introduces a potential constraint on upward movement in crude oil. So we really at a very crucial juncture. And yesterday we had the API weekly crude oil stock, which for yesterday's one increased by 0.939 million compared to the upper week, which was a deficit of 2.349 million. Now today we are looking forward to the US Energy Information Administration, which they will be dropping their stockpile for last week today. So forecast is expecting a decline of 2.23 million compared to the previous one of 4.259 million. So all of this data here is putting us at a pivotal juncture in this market. So it is very, very important that we exercise patience around this area, especially when price action appears to be breaking out of the highest level since the beginning of this week, which is situated at the $74.50 area. Remember, this level here had been playing a major role in pushing price to the downside, as you will see here. Continued selling pressure, and not until about 30 minutes ago we saw a little bit of breakout of the structure, triggering our fourth buy position on this particular asset. Now, the breakout here cannot be validated yet, as this candle still has about 4 minutes for it to close. Now, if it closes above the structure, then definitely we might be seeing a new platform that will push price to new high. So with that in mind, let's ensure we move our stop losses accordingly, and we still maintain a bullish bias as long as price action still remains above the ascending trend line. Remember, we have our ascending trend line right here, which has been supporting this bullish momentum since the beginning of the week, and there is a possibility that we could see some profit taking activities since price action is back at a crucial juncture that might lead price back into the ascending trend line, maybe to incite an uptrend continuation. And in fact, if a breakdown happens, then we might start considering selling this particular asset. But in the meantime, price still remains around the $74.50 level. So this is where our center of focus will be for today. Now, for those of us who had missed out on this opportunity, let's see if the market will present another opportunity, maybe a retest of the structure to happen before another wave of bullish momentum will happen. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. And in fact, if it drops below the $74.50 area, where continued selling pressure persists below the $74.50 area, giving us signs that buyers are finding it difficult to climb the $74.50 area, then this could incite a counter trend move, maybe back into the ascending trend line, and that will dovetail to, let's say, a minimum of 100 pips to catch there. So if you are a counter trend trader or a scalper and you're willing to capitalize on such counter trend opportunities, you can take charge of that move. But personally, I will stay clear out of that and wait for price action to get into the ascending trend line before I make a decision on that one. So this is my view on the US oil spot today. And once again, congratulations to everyone who had capitalized on this move. So far this week, we've made close to 500 pips in total based on all the positions we've opened this week. So once again, congratulations to you guys. Now, I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. And if you have any questions whatsoever as regards to the current setup, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, after which we will move on to the next asset on our watch list. All right. So, in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. So the next asset on our watch list for this morning is going to be the cable market, that is the GBPUSD. And USD, we have quite an interesting situation going on this market right now after we capitalized on I think we have 3 buy positions as at yesterday's trading session, and of course all buy positions have been closed with a minimum of 80 pips. Depending on where you have moved your stop losses to, a minimum of 80 pips will have been captured on this single buy move that we had yesterday. And the selling pressure we notice here can be considered as a reaction, or let me say, the pound sterling is facing bearish pressure as a reaction to the release of the UK data that came in this morning, as we talked about earlier, and things were not looking that rosy. In terms of, the inflation rate is dropping and the pound sterling is not looking attractive right now, as it begs the idea that they're likely going to be a rate cut by next year, or probably there's not going to be an interest rate hike for the next interest rate decision, hereby putting a lot of pressure on the pound sterling right now. And as it is right now, we need to exercise a lot of patience here, as we had an engulfing bearish candle breaking down that our ascending trend line, which has been supporting the bullish idea since the beginning of this week. And as you will see, price action has broken down that ascending trend line at this point. So we are at a very, very crucial juncture in this market right now. And I did mention in my commentary this morning, for those of you who are who are with me on both my TradingView and Telegram platform, that we will need a lot of patience to see how the market will react to the structure. Now, if you remember vividly, at the beginning of the week, we had a range which was guiding our decisions. Remember, for the first 13 hours of the week, price was more or less confined within the 1.2700 area and the 1.266500 level. And of course, we waited for either the breakout or breakdown of that range to give us an opportunity to trade. We sold initially. Remember, we had about 30 pips move here, moved our stop losses to break even before we were taken out of that sell position. And then we had a buy position triggered here. Then we also had another one right here, pushing price to the upside. Now, what I want to bring out from this is that price action is now back into that range, that area, that range we identified at the beginning of the week. And if you remember vividly, that range expanded into the 1.26300 area, something like this. We can see the 1.26300 level, which happens to be the lowest point for price action for this week. So at this point in time, personally, I still think that the market structure still has a bullish outlook. And the reason why that is this. Now, if you look at this structure, you will see that this is the lowest point price action has been for this week, had a 1.263. And if I zoom out the structure, you will see that we had this impulsive move that started midweek of last week trading session, and we did consider this bearish impulsive move as a retracement of that impulse leg, where we identified the zone between the 1.265 and the 1.25500 area as a potential demand zone, as this area here may likely be where price action the retracement phase will culminate before another wave of bullish momentum will happen. So as a result of this and the fact that price still remains above this golden zone area, that is between the 50 and the 78.6% of that impulse leg we identified on Monday, I still want to hold on to a bullish bias unless price action breaks down this ascending trend line we spotted on the higher time frame. Now, for those of you who had not watched my weekend video on the GBPUSD, I recommend that you go ahead and watch that video so you can see how we were able to identify this ascending trend line. The links are right in the description box of this current video, so go ahead and check it out after the live session. So at this point, I'm still going to maintain a bullish bias here. Price action still sits exactly above that potential demand zone and the 1.26 level area, which interestingly shares a confluence with that ascending trend line. So let's see how the market will play out here. We require quite a lot of patience around this area, but as it is right now, I will continue to look out for bullish setup. That is, if I can notice a reversal pattern, maybe like a double bottom structure or head and shoulder pattern around this area, I will join another wave of bullish momentum. Now, there is a caveat to this joining of bullish momentum. Remember, we have this ascending trend line which was broken to the downside a couple of hours ago, as you will see here. Now, if we at any point in time join a buy opportunity around this area, if any reversal pattern forms, I will definitely give you an update on my TradingView and Telegram platform. If we do join a bullish opportunity around this area, please, we want to exercise some patience as soon as price action gets into this ascending trend line. You know, from a technical standpoint, when price action breaks down an ascending trend line like this, we expect it to come back, retest the structure to incite a downtrend move. So if we are buying here and price moves into the trend line, maybe around the 1.27 and the trend line, that's about 30 to 40 pips movement of price. Let's move our stop losses accordingly, secure the current buy position and wait, and let's see how the market will react to the structure. If price gets into this area and we begin to notice continued selling pressure, that is, buyers are finding it difficult to climb back above the ascending trend line, then this will welcome a selling opportunity that will incite a downtrend continuation from that moment. However, if price breaks out of the ascending trend line, then price will also have broken out of the key level at the 1.27350, where a retest of structure will be confirming that we will be going further to the upside. So this is how we are going to be managing our positions on the GBPUSD for today. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decision. So I still look out for buying opportunities, and for scalpers, for those who love doing scalping, well, we might be still look out for selling opportunities towards this ascending trend line I spotted earlier. Remember, this ascending trend line is peculiar on the higher time frame. So if selling pressure persists, like say we see something like this, continue selling pressure below the structure, you might be in for a counter trend opportunity. It's very, very minimal. Let's see how many pips that is. That's about 60 pips thereabout. If you are okay with that, no problem, you could join that move. But personally, I will wait for price to get into the structure before I make any decisions here. So let's see how this will play out. The next 2 to 3 hours should give us an insight into the direction that price action wants to choose for today's trading session. And trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give you updates as at when due. So as it is in summary, I maintain a bullish bias on the GBPUSD unless the market structure states otherwise. So this is my view here. If you have any questions, feel free to let me know in the comment section. So because of time, I will just take the next 5 seconds to see if there are any before we move on to the last and final asset for today's trading session. All right, so in the absence of no questions, I want to assume that we are all on the same page and that all I've said so far has been quite explanatory. Now, if you have found this content helpful so far and useful in making your own independent trading decisions, I would really appreciate your support by giving this video a thumbs up. Your likes are very valuable to me, and it of course allows the algorithm promote the video to a wider audience of traders who may find this material or session beneficial to them, and at the same time help the community to grow as well. So thank you very much, guys. I look forward to your likes. Click on the like button, and thank you very much as you do so. So with that being said, I will be moving on to the next assets on our watch list and the final one for today's trading session. So the next asset on my watch list right now is my favorite amongst the assets I usually monitor, and that is the XAUUSD, popularly known as the gold spot. And in fact, on the XAUUSD as well, we have done very, very well since the beginning of the week, as we have currently scooped in close to 400 pips, I think, on this particular asset as price action continues to find new high. In this particular market, though the week started very, very slow, though we had bought since Monday, but it took about 24 to 36 hours before the momentum finally kick-started. And of course, the XAUUSD live window for yesterday closed abruptly. Unfortunately, I never knew it has closed. It took me about 3 hours before I knew it has closed. When I came back to my system, to my desk, I realized that it has closed, but I did give some updates as regards to that on both my trading view and Telegram platform. So what has been going on in this market since the beginning of the week, and what is it that we are doing here? Now, at the beginning of the week, we saw how price was confined within a range that is between the $2,024.80 level and the $2,016 area. At the beginning of the week, though price started on a very strong bullish momentum, as we saw price started the week around this area. Now, there's one peculiar thing about the 2016 area if we zoom out of the structure. And for those of you who had watched my video on the XAUUSD during the weekend, realized that we talked about this descending trend line on the higher time frame, which price did break out of. Remember, we saw this engulfing bullish candle breaking out of that trend line, and in fact, as at the end of last week's trading session, we saw price come into the trend line, and as soon as price tested the trend line, we saw some buy pressure resume, and this of course continued during the early hours of this week's trading session to further emphasize that we might likely be seeing an uptrend continuation. And as a result of that, we decided to position ourselves at exactly the breakout of the resistance line of that range at the $2,024.80 level to capitalize on that uptrend move. And this was exactly what happened. We never even considered selling at all this week, as price action did not at any point in time come close to the support line of the flat channel we identified at the beginning of the week. Then another thing I noticed here yesterday while dissecting the structure, and I did updated this during the XAUUSD live window, was this descending trend line, as you see here after connecting the series of lower highs. Now, if you look at the structure closely and taking into consideration the impulsive move that brought us to this point, you will see something like a trend continuation pattern there. So let me give you a visual representation of what I'm talking about. So we had this impulsive move right here, then price transition into lower highs, then we have the support line of that range, which happens to be the descending trend line we identified on the higher time frame, giving us something like a pennant, or let's say a flag pattern, depending on from what perspective you are looking at this. But the most important thing here is that it is an uptrend continuation pattern where the breakout of the trend line of the resistance line of that pattern also shares a beautiful confluence with the key level which identified at the beginning of the week, which falls exactly at the $2,030 level. So a breakout of the structure further emphasized the strength of the buyers, triggering our second buy position for the week. Then we kept on adding more positions, had the breakout of the 2035 and of course the 2043 level, which currently is running in a minimal loss at this point in time. So we have a minimum of 4 buy positions on the XAUUSD, and for those of you who capitalized on this opportunity, well done and kudos to you for being on standby to capitalize on this opportunity. Now, you know, the next thing we want to be doing right now is to ensure that we safeguard all the buy positions we have here, as anything could still happen. Remember, we are within a seller's niche. For those who watch my video on the XAUUSD, you will remember that price is currently trading around a strong supply zone, which has been consistent since the year 2020. Now, in this situation, we want to ensure we move all stop losses accordingly. Now, from all indications here, I will suggest that anywhere around the $2,038.50 level and the $2,034.50 area seems most appropriate to move all stop losses to, while giving enough breathing space for price action to move around. Now, with the current situation we have right now and a well-secured position, what is going on behind the scenes? Now, the current uptick in the US dollar and the prevalent risk on sentiment could be serving as a hindrance for the growth of safe haven assets such as gold. And as a result of this, you will have noticed that price action has fallen into a range, especially during the Asian session, as you will see here, giving us an insight into the level of indecision going on at that point in time. And for me, I still think that the sentiment in the market is still in alignment with the expectation of a potential rate cut as early as March next year, which keeps the US Treasury bond yield and the US dollar restricted to their lowest point in recent time, and interestingly, lending support for safe haven assets such as the gold. Now, amidst this development, we need to be very, very cautious, as the current structure at this point suggests that market participants may be waiting or stepping aside to allow the key US inflation reading scheduled for Friday to happen before making aggressive bets from this particular point in time. So at this juncture, it is very, very likely that we could see a long consolidation phase in anticipation of that inflation data coming in from the United States on Friday's trading session. So as a result of these expectations, we want to exercise caution, move all stop losses accordingly, and wait for significant confirmations before we jump into any current position at this point. Now, with the way things are going right now, how do we position ourselves for the next move? Well, the first and first here is to acknowledge this ascending trend line. So I would like to readjust this ascending trend line so it can fit with all the recent pivot lows we have here. So bringing out my line chart and connecting all the series of higher lows here, so I will make sure it touches as many as possible. You will see that we have this ascending trend line still very, very intact. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we shall feel comfortable in our buy positions. Though that doesn't mean that sellers might not come in at any point in time. Well, we could be considered as a profit-taking activities, as you will see how the $2,043 level since last week Friday has become a barrier for buyers in this market. And remember, if you had watched my video on the XAUUSD for the weekend, you will see that I mentioned that we are within a strong selling niche. And if this persists here, we could see a situation where price could drop into as far as the ascending trend line that is come into the structure before another wave of bullish momentum can pick up here. And if it breaks down the structure, then this could incite a sell-off in this particular market. So since price still remains above this trend line, let's see how the market will react to that 2043 area, though we had a position triggered around that area. And if we get taken out, no problem, we wait to see how the market will react to the ascending trend line before we can start considering maybe joining the sell move to the downside, or probably getting ready for another wave of bullish momentum if a reversal setup unfolds around the ascending trend line. But pending the time that will happen, we exercise patience here and wait for the structures to mature. And if price continues to climb and find new highs, then I personally have a buy stop order above the $2,047 area, which will help me to maximize the potential of this bullish move. So let's see how this will play out in the next couple of hours. In the next 2 to 3 hours, we should be having an idea into what price is likely going to be doing from this current structure. So this is my simple view here on the XAUUSD. Let's exercise patience, ensure you've moved your stop losses accordingly, securing all the current positions, and I will be with you in the comment section of both my TradingView and Telegram platforms to give you update as at when due. If you have found this content helpful, please, I will appreciate your support. Give the video a thumbs up. Your likes are very valuable to me, and in fact, it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial. And thank you very much as you do so. So with that being said here, I think we should be rounding off on today's Forex Morning Mastery session, as I'm still looking at the comment section but yet to find any inquiries or questions whatsoever. Okay, so All right. So, in the absence of no questions, I think it's high time we started rounding off, and I just dropped the link to the XAUUSD live window right in the comment section, pinned at the top of the comment section. So you want to be clicking on that link. Click on the notify me button so that you can get notified as soon as we come on live. Now, for those of you who don't know what the XAUUSD live window is, probably you are new with us. Well, the XAUUSD live window is a platform that was born out of popular demand from members in this community, where we come together on a daily basis to monitor real-time price action of the XAUUSD chart during the New York session. So it usually kickstarts about 5 to 10 minutes into the New York session, and it lasts within the first 5 to 7 hours of the New York session, depending on the volume of trading activities for that particular day. So I look forward to seeing you guys right in the XAUUSD live window, right in the comment section as well, and let's make it an eventful session. So with that being said here, it has been a wonderful moment with you guys. I really enjoyed every single moment I had with you. And we were during the course of the session, we were able to attend to 3 major assets which are on our watch list for this week, including the GBPUSD, the USOILSPOT, and of course the XAUUSD, where we were able to identify simple trading setups that we will be using to guide our decisions for today's trading session. And I do hope you marked out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. And always remember to exercise patience and allow the structures to mature before you jump into any position. And another thing I would like to say here is that every decisions we make in the financial market is always considered to be an educated guess until price action hits your TP target. Now, in that regard, we want to make sure we have a well-defined risk management strategy in place and make it consistent with all the trades we take from our account. So it has been a wonderful day. And for those of you who joined us for the first time, I do hope you were able to gain 1 or 2 things. And if you did, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions. So I see your comment, Kelechi. Thank you very much. You are very much welcome. Exactly. And while we try to strike, we want to also exercise patience and position ourselves in such a way that we can capitalize on any potential move when it finally happens. So on this note, I wish us all the best of luck today, and I look forward to seeing you in the comment sections of both my TradingView Telegram platform and of course during the XAUUSD live window as we continue to monitor price action. Trade smart, trade consciously, and do have a wonderful day. Bye bye.